Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news that China is increasingly closing itself off from most meaningful scrutiny. Tracking what is really going on in China is getting harder as it veers towards media controls that don't permit anything but sycophantic praise for Beijing. Its controls are now pervasive. But we do know that the African swine fever risk is remaining high, generating tough new restrictions that threaten pork supplies and therefore food prices and to some extent food security there. Adding to concerns is the discovery of new variants. And not helping is the rise of animal feed commodity prices, with soybean and corn prices on the rise again. Iron ore prices fell almost 2% 3 days ago, but that shift lower hasn't gained any momentum since. Australian miners will still be very happy at these adjusted levels. And China's getting a surge of foreign direct investment. It was up 32% in February from a year ago, although to be fair, the 2020 base was severely compromised by the pandemic. Not surging or even improving at all is Hong Kong's industrial production. The latest data there shows it's down 6% year on year, a retreat similar to the prior period. And India also released industrial production data over the weekend, and that declined too, disappointing because of a small rise was expected. But in Canada, there's been a surge of hiring in February, and far more than was expected. But although there was good full-time employment gains, most of the rise was part-time employment. And Australia is working to establish Singapore as a quarantine gateway, holiday destination and a potential vaccination hub for returning Australians, international students and business travellers. If successful, it could kickstart the multi-billion-dollar market for international students at Australian universities. Worldwide, benchmark bond yields resumed their aggressive rising trend at the end of last week, causing even more pain for bond investors as inflation expectations stay high. The US Treasury 10-year yield is up 11 basis points from Friday to 1.63%, with a sharp rise to its highest in more than a year. And the price of gold starts today firm after closing in New York, up $7 to just on $1,728 an ounce. And oil prices have stayed high over the weekend too, dipping just 50 cents to just on $65.50 a barrel in the US, while the international price is now just on $69 a barrel. And the Kiwi dollar opens today holding at 71.7 US cents, about where it was a week ago. Against the Australian dollar, we're at 92.5 Australian cents, and against the euro, we're just under 60.1 euro cents. That means our trade-weighted index opens the week at 73.7. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.